But the reason why this is not going to go off the way that Republicans had hoped, and maybe a lot of people had hoped, is because the Senate and the president are not going to approve that. What will happen then at the end of the year is the House will vote on the budget, and they...
Welcome to Gold Silver Pros.
Hey everybody, this is 𝘎𝘀𝘾𝙊𝙈 with 𝘙𝑉𝑒𝑅Pros.com. It is Thursday, the 12th of January, 2023. And for today's video, which is entitled, "Here is Why the Proposed IRS and Sales Tax Measures Are Going to Fail," the reason I'm doing this video is because there's a lot of misinformation in social media about what's going on with the new tax bill and adjustments that the House, which is now controlled by Republicans, is proposing. And I'm going to tell you why those are going to fail here as we get into the program. But I really wanted to clear up a lot of the misinformation. I saw a lot of tweets about it, and I love Twitter, but Twitter's not the place to really put this kind of discussion without putting some supporting links or information. And I see just a bunch of information running around. So I'm going to put this information out there to help clear up exactly what's going on so that you have that information in order to help you plan for what you're going to do for your taxes and plan for what the taxes may be in the future. So essentially what was proposed, or what's been proposed, is a national sales tax. So I'm going to put up on screen an article here from the mainstream media talking about how the House Republicans vote to strip the IRS funding following pledge to repeal nearly $80 billion approved by Congress. It says House Republicans on Monday night voted to slash funding on the IRS following a pledge to repeal nearly $80 billion approved by Congress last year. But it doesn't have support in the Democratic-controlled Senate, and the White House says it won't pass a bill, obviously, because they're the ones that basically passed it in the first place. And so what's likely to happen, and this is a good article by Forbes describing that, and I wholeheartedly agree because we've seen this happen so many times in the past, is that what's going to happen is the House is going to say, it has already voted to repeal the money, and is also going to vote to implement a national sales tax, get rid of payroll taxes, get rid of corporate taxes, get rid of inheritance taxes and other types of taxes. And I'll get into that here in a moment when we look at the actual bill. But the reason why this is not going to go off the way that Republicans had hoped, and maybe a lot of people had hoped, is because the Senate and the president are not going to approve that. What will happen then at the end of the year is the House will vote on the budget, and they will vote to cut IRS spending. And then there's going to be a negotiation because if they can't agree, then you have an issue with the debt ceiling where the government may go unfunded, and House Republicans may use that strategy, which has been used in the past, to force a reconciliation. And what's more likely to happen is that a lot of the money that was given to the IRS will be cut, not a substantial amount, not a majority, but a nominal amount, I guess, maybe to appease enough people to get a reconciliation and get all of that passed. And in terms of getting the national sales tax, there's basically no way that's going to get approved, but for the exact same reason. But I wanted to walk through with you guys exactly what they're proposing on the sales tax, walk through the bill, because essentially it's very interesting, but it has no chance right now of passing. But this is introduced in 2021. It's expected to be reintroduced this year, according to the news, Fox and CNN and those mainstream media outlets. Originally proposed by Earl Buddy Carter back in 2021. It's H.R. 25. And I'm going to go down to the section that just talks about the sales tax, essentially. And here are the principles of that. They want to get rid of simplify the tax law to tax consumptions of goods without exception only once, to prevent double, multiple, or cascading taxation, such as double taxation on certain corporate profits passed down to people. And they essentially want to pass a 23% income tax on a consumption tax, instead of having all this plethora of different type of taxes like estate taxes, death taxes, all those other types of taxes. And they propose 23%, which would be, my understanding is that this is in addition to the sales tax you already pay locally. So like what I pay right now is, I think in the North Texas area, it's about 8.25 when you add state and local taxes together. So if this were to pass, I would pay 31.25%, I guess, total taxes. At least that's my understanding. So about a third of my income would still go towards taxes. So it's not really a break. if you're spending your income. Now, if you're the average person that spends most of their income and doesn't save, which is about 95 to 96% of Americans, this is not really going to change anything because you have to consume and you're going to end up spending the most tax. You're actually, poor people may actually end up spending, well, not poor, the poor middle to middle class, upper poor to middle class, so define that tranche would actually pay more taxes, because that 31% effective rate, if you live in North Texas or whatever your local tax is, I think in California it's a lot higher. They may actually pay closer to 40% if both of these get put together, be high 30s. You essentially would be paying some, from, depending on what state you live in, between 30 and 40% in taxes. Now the poorest of the poor would get credit. So there's basically, Twitter, people on Twitter are calling it universal basic income. It's not. It's a tax credit for the poor, which we already have. They would continue to leave that in place. So the poor would pay less. They would pay their normal state and local taxes, but they would get an exemption on this federal tax. They wouldn't pay the 23%. Then once you get into certain brackets, you're moving into like the middle class and above, those people definitely pay it, because those people spend all their money, and it actually would be higher because a lot of middle class may be at lower tax brackets, maybe in the 20% or the 15%, depending on how they file their taxes and deductions and things like that. So the sales tax of 23% plus their local actually may be more for them. And so I think that this is not necessarily good for the people. Now, in terms of fair taxes go, having a fair tax certainly could be good for people if it were a lower tax. But given the fact that we already pay state and local, anything above 5 to 10% essentially puts you almost in the same tax bracket if you're in the middle class that you pay on your taxes anyway. It's not a break for you. So even though the Republicans are saying this would be a break, the way that it's written is not really a break. And also further, I do not think that this has any chance of passing, because you have to look at all the special interests that have developed over the last 100 years. They're in the tax code. I mean, the tax code is gigantic. It is ridiculous. And the reason it's ridiculous is because it has all these exemptions and incentives and things like that. You'd be completely changing the scope of investments in the United States. For example, real estate and the ability, to write off with depreciation. Would you still get depreciation? Would you pay sales tax on income? How would that affect certain investment classes? Depending on how that occurs, because the way I think that bill's written, it would remove a lot of the existing tax code, which would screw up the billionaires and millionaires' plans for how they manage taxes, and even some of the, the wealthier middle class, for how who have money to manage, actually have savings, and actually, could have the money to put in place an effective tax strategy. Those people may not necessarily want that, because all of their investments are tied up in the existing tax plan. If you just remove all of those taxes and put a flat consumption tax, it may screw up literally trillions of dollars of tax planning that's been done, over the last, probably 20, 30 years for businesses are holding long-term assets, maybe even longer. And if you're talking about the potential to affect family fortunes, this could be huge, because again, that tax could screw up a lot of investment strategies. It could reduce the return on investment, a lot of popular investments. So going straight to a 23% consumption tax, getting rid of all the other tax code, essentially simplifying, could be good, but it has adverse consequences for a lot of people that aren't going to like it. And if you add that 23%, which is really high, to any state and local, you're probably sitting at least 30% in most places in the U.S. and approaching 40 in others. And, there's no way out of that if you consume. And like I said, once you get past that exemption level at the poorer incomes and you start getting in the middle class, those people, it's going to be worse for them, because they have to consume to survive. But look at what what it has done to the economy and prices. And we're going to have 2 more rounds of inflation. If you guys have been watching my channel, 2 more big rounds of inflation coming. So with this inflation coming, it's going to increase the cost of goods. When you increase the cost of goods, the tax, because it's a percentage on that cost, is therefore also going to increase, and it's going to burden the middle class, and even up to maybe higher levels of the upper middle class. And the reason I say this is because the upper middle class is not really the upper middle class of old. A lot of that upper middle class has been cleaned out by existing economic policies that basically rob them of their wealth. Essentially, the excessive money printing, the excessive debt, the excessive government spending, all of those things, plus consumers, to be fair, consumers buying into all that and leveraging up and not having, enough money now to make ends meet, because maybe they live beyond their means. I think all of those are aspects of it, and I'm not trying to criticize consumers. I know that may be tone deaf right now, or seem tone deaf, because essentially prices are going up and people are suffering. And here I am saying that consumers have a part in this, but you have to look at the whole thing. You have to look at the last 50 years and say consumers were the ones that lived above their lifestyle. All of us did. We built big houses, big McMansions. we bought stuff we didn't need. We have 5 TV sets and 4 cars and things like that. Okay, we don't need all that garbage. Okay, and so essentially we overspend as well. So at every layer of our society, I think could be hurt by this type of bill. And I'm not against a flat tax, but I think that the consequences of this need to be examined. Now, as far as the IRS part goes, and the elimination of all those billions in spending, most of the spending the IRS is going to go to compliance. So it's more auditing and stuff like that. There is a few billion that's going to customer service, but the overwhelming majority is actually going to go towards compliance. And the IRS is saying they're going after wealthier people, that we've been targeting poor people, but that doesn't make sense because poor people don't pay tax because of all the exemptions. So how could the IRS be focusing on the poor, which don't pay any tax because of exemptions up to a certain level? It's really the IRS is going to focus on the middle class and maybe the lower part of the upper class as well. And I don't really have a tax bracket range in mind for you because we have to see what would happen here. But there's no way that the dialogue around the IRS hiring more agents to help the poor, because the poor don't pay a lot of taxes anyway. They don't need to audit them, and they haven't been targeting them. It's clearly to target the middle class and businesses. I don't know, any other way to see that. What the Republicans said is, instead of adding 87,000 new agents to weaponize the IRS against small business owners in middle America, the bill would eliminate the need for the department entirely by simplifying the tax code with provisions that work for the American people and encourage growth and innovation. I know that they probably think that they're trying to do something good here, but honestly, that's a mess. But here's how the money is going to be spent. The money's already been approved. About 46 billion goes to enforcement. That's auditing and that type of thing. Other enforcement measures to ensure that taxes are paid and I's are dotted and T's are crossed. Again, not gonna go towards the poor. They don't. It was never gonna hurt the poor. They don't pay a lot of taxes given exemptions and things like that. They don't have a lot of money, a lot of income, and the tax code is currently constructed where their overall tax burden is reduced significantly. In fact, in some cases, some of the poor actually get money back to help, in the form of like child tax credits and things that you get regardless of whether you had taxable income or not. So there's a difference between a deduction and a credit. A credit is given to you. A deduction just reduces your taxable income. But if you don't have taxable income, then that credit basically comes back to you, is my understanding. Another 25 billion is going to go to IRS operations. That's going to expand significantly. 25 billion is a lot of money. Expand significantly the IRS's scope over the economy. Only 5 billion is going for business systems modernization and 3 billion for taxpayer services. So out of that 80 billion, 1/10 of it is going for what the public wants, which would be better modernization and better customer service from the IRS. In my own particular case, having a business, I've called the IRS. Probably when I first did the business, I was trying to figure out how to do my quarterly income tax reports. I think I might have called the IRS 30 times. And the system you log into to file those is woefully under documented. It does not tell you what form to file and stuff. So you have to get someone on the phone. It's really burdensome for people. And that's why the IRS gets so many calls, is because the existing system is so messy that it's hard for people to understand it. In any case, that's my view on what's going to happen with tax code. I don't think there's any chance in heck that the House measure will pass, because the Democrats, own the Senate and they're in the White House right now. And further, I think that there could be deleterious consequences to a lot of people in society. I think a lot of the wealthy would oppose this because of their tax strategy. I think a lot of middle class would oppose this because the amount of tax that you're asking people to pay in that consumption tax is exorbitant. In many cases would make them pay more than under the existing system, where they're going to get certain exemptions and things like that and be able to manage their tax bracket a little bit better. So in this particular case, at that level of consumption tax or sales tax, I don't agree it necessarily help people, and I don't think it's going to pass anyway. But I wanted to clear all that up because there's a lot of misinformation out there, and honestly, I think that kind of stuff needs to be cleared up. All right, last part of the show, I wanted to let you guys know we do have a Kinesis account. I love Kinesis. Because I don't want to store a lot of gold and silver at home. I think it's a personal risk. I think that's a counterparty risk. The counterparty of storing your gold and silver at home is the person that comes to take it from you, which is basically the other 360 million people in society, if they wanted to, if they knew you had it, potentially. You don't know what members of that society. So there is counterparty risk to holding your own. So to offset the risk of holding it in your personal residence, I signed up a Kinesis account. You guys can click on that referral code below. And that definitely helps the program, and go forward and setting up your account. I think it's a great idea. I've looked at Kinesis. They've audited their metals. It's a great platform. I've been using it for a while. I have no complaints. I've spoken with management. We have a video out on the channel if you guys want to watch that. So if you're interested in having a metal stored remotely and having the option for either a virtual or, depending on where you live in the world, either a virtual or a real debit card that you can spend that gold and have access to it like it's a savings account, and you can use Kinesis to develop your savings account and have access to that gold instantaneously through the normal system if you need it. Kinesis is a great way to do that. I've been using it. I highly recommend it. All right, this is going to do it for today, guys. A bit of a short one, but it's really important to talk about this. I think it's that what's being reported is kind of a mess in the alternative media. I think mainstream actually has done a better job here, and so I wanted to come, on the channel and talk about that. But this will wrap it up. Until next time, Rob King, Gold Silver Pros. Have a great weekend, everybody.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.